Good evening, friends. Welcome to the next technical session, virtual coaching classes organized by Board of Studies ICA. Today we are going to discuss on final indirect taxes, paper number 8. In this particular indirect tax paper, today we are going to cover on chapter number 8, which deals with your input tax credit under GST. So this input tax credit under GST, we have planned to have sessions in 4 classes, considering the vastness of input tax credit and the kind of in-depth of analysis required in this particular chapter. So what we will do, we will go in a phased manner. We will understand what is an input tax credit. We will understand what are the conditions and restrictions casted in this particular regard. Also, we will understand how do we calculate what is the eligibility of input tax credit based on a couple of rules framed on the basis of returns filed by the suppliers. Finally, we will understand what are the procedural aspects revolving in relation to input tax credit. We'll go in a phased manner one by one. Now, I understand that you have already covered a couple of chapters, couple of areas of indirect taxation when you have been doing your internship. So my suggestion is don't jump into the conclusions based on the basis of the examples we are going to discuss. Let us go in a procedural manner to have a thorough understanding of the conceptual clarity. So today we will start with our input tax credit, and today's coverage I'm going to take you through the genesis of input tax credit, the genesis of input tax credit under GST. For that we will have a basic understanding of how the input tax mechanism was there under central excise. Then we will have the bird's eye view of the entire input tax coverage. Today's session we will have input tax starting section 16. What is input tax which is covered under your section 16? For that we will have a couple of definitions which are relevant. The definitions which I am going to talk to you are not exhaustive, but these definitions are something which are relevant for entire chapter 8 per se. Then we will understand to avail my input tax credit, what are the conditions? What are the conditions? First and foremost, am I eligible? If I am eligible, what are the conditions laid out in relation to my input tax credit? From there, we will touch upon the relevant rules and what are the procedural aspects which have been covered under my GST laws. So to start with the MODVAT and the SENVAT. Students who are not familiar with this MODVAT and SENVAT, not to worry, this is not under GST. This is the genesis of the input tax rules, input tax provisions, what we are reading as of today under GST. So for convenience sake, I'm just making you to travel how this origination has happened. Erstwhile under central excise in relation to goods, when we talk about central excise, this central excise provisions are applicable in relation to manufacturing activity. So when there are goods manufactured, eligibility of input tax credit was there. Those days we used to call as MODVAT, modified value added tax. So this MODVAT was precisely in relation to goods which are manufactured. Later, when service tax got into picture somewhere in 1994, where services list got added to the central levy, where input tax credit on services was separate, input tax credit on goods were separate. The origination of this MODVAT to SENVAT, that means to say, a manufacturer was doing a manufacturing activity, he was allowed only to take input tax credit on goods. Input tax credit on services was not allowed to set off with the goods per se. Take an example. So there is a manufacturer who's doing a manufacturing activity. He's also doing some services under his factory. Example, Maruti Limited. Maruti is into manufacturing of cars, motor vehicle, and also has got a service division. So any input tax credit I have taken in relation to goods can be set off only in relation to goods. Same way, any input tax credit I have taken for services was allowed only to set off with services. This was an earlier law under MODVAT central excise. 2004, there was a breakthrough where SENVAT, central value added tax. This was a term which was coined where input tax credit on goods, input tax credit on services. both were allowed for netting off. This was the origin of SENVAT. Under VAT laws, every state has got their respective territorial jurisdiction where any tax which was levied on that particular state can alone be set off or availed as an input tax credit. In case if any goods are purchased from outside the state, then there is a central sales tax which is having a cascading effect of taxes. So if I'm a manufacturer sitting in say Tamil Nadu, I have to procure some goods from Maharashtra. Then the seller in Maharashtra will charge central excise, will also charge something called central sales tax. So the goods which have come to Tamil Nadu, say Chennai, I used to take the benefit of central excise, but the CST which was charged by the dealer in Maharashtra was not allowed as an input tax credit. So this was a big blockage under the erstwhile law, where when all the laws got merged together, we had this new law called GST which has come into picture. So what we are going to do, as I've said, we are going to have 4 sessions. So 4 sessions, we are going to cover these aspects, these particular chapters, these particular sections under input tax credit. This is covered under chapter 8. Friends, starting with, we are going to discuss on eligibility and conditions of taking input tax credit. So this eligibility and conditions, this particular provision says when you are eligible to take input tax credit and what are the conditions which are relevant for taking my input tax credit. Because you are studying your final paper, I presume that you are aware of basics of input tax credit, the basic accounting entries which are to be posted in relation to my input tax credit. With that particular assumption, I'm not going to touch upon the basics. What do we understand from input tax credit? How we have to pass the relevant accounting entries. If any one of you want any briefing, please put into your question window. I would touch upon those particular lines also. So to start with, this particular eligibility and conditions stipulated, section 16 read with rule 36, rule 37. This is something we need to join together, read together. Next is your apportionment of credits, block credits, which is covered under section 17. Also rule 38, rule 42, rule 43. So when we are going to read section 17, the conditions for allowing or conditions which are restricting your input tax credit, I have to read my section 17 and 3 rules called rule 38, rule 42 and rule 43. Availability of credit in special circumstances. This is one particular sub-chapter which deals with, if I take registration, assuming that from July 17 I have been into business, I have not taken registration under GST law because I am not supposed to take based on the threshold limit. If I decide, say in September 2020, if I decide to get registered, what will happen to my purchases which is lying in my closing stock? Or if there is a sale of one of the entity on a going concern to another entity, what will happen to my input tax credit which is accumulated? So this section 18 is going to talk about scenarios where you're not registered, you're getting registered today, or you're under composition, from composition you're moving on to regular, or from regular scheme you're moving on to composition. Various permutations and combinations are covered in detail in your section number 18. There are 4 rules, 40, 41, 41A, 44. These 4 rules should be harmoniously read while reading this particular section 18. Then we have distribution of credit by input service distributor, which is covered under section 20 and section 21, read with rule 39. Input service distributor, this is one concept which has been borrowed from our service tax era. This input service distributor, this is a concept where as an entity or as a business entity, if you are registered in one state and also having place of business in other states, you will be called as distinct person under section 25. So if I have received common credits, that is input tax credit on common services. Example, I am a company registered in the state of Maharashtra. I have branches in, say, Delhi, Noida, say Punjab, then you have in Chennai and also in Kerala. When I have been located at multiple places and I get couple of bills at the head office. Take an example. There is a statutory auditor who has conducted the audit and they have issued a bill for, say, 10 lakhs. On 10 lakhs, the statutory auditor has charged a GST of 18%, that is 1,80,000. Now this bill, when it comes to the head office in Maharashtra, this credit I cannot enjoy only in Maharashtra because the auditor was appointed for the entity level. When all the 5 branches, including head office, was done by the auditor, that particular credit which I'm going to receive at head office, I have to distribute among the other units. The mechanism how I distribute is covered under this particular subchapter called ISD. So we are going to have in detail discussion on this particular ISD concept also. The next concept is covered how we have to use this ITC. So when I have learned what is my input tax credit, when I can take my input tax credit, what are the conditions relevant for taking input tax credit, what are the blockage, what are the credits which I cannot take input tax credit, learning all these things, I have filed my returns. My returns, when I file my returns, my input tax credit goes and sits in my electronic credit ledger. As we know, one nation, one tax, which is the slogan of GST law, I have paid CGST, SGST, IGST. I have taken credit of these 3 credits, which has come and sat in my input tax register called electronic credit register. So once input tax has come into my electronic credit register, this particular rule 88A is going to talk what is the mechanism for me to utilize my input tax credit. So can I set off my IGST with CGST, SGST? Can I set off my CGST with IGST, SGST? And setting off SGST with CGST and IGST. So this is one mechanism, one particular flow which we are going to understand in this particular chapter called Rule 88A, covered under section 49, 49A and B. Finally, we will touch upon one subchapter called Conditions and Restrictions in relation to inputs or capital goods which was sent to job worker. There is one rule called Rule 45 which has exclusively talked about this particular aspect. Most of the manufacturing concerns, this is one chapter which is very, very prominent for one to understand. Now, the plan of action for us, today's session 1, we are going to discuss on section 16 read with section 18 to the extent possible. If time permits, we'll travel to section 18. Section 16, which talks about your eligibility of input tax credit and conditions stipulated in thereof, we're going to talk about in my section 16. Then second session which we have planned, we are going to cover your section 17, which talks about your apportionment and blockage of credits. Depending on the time availability, section 18 and section 17, we will try to have a coverage together. Then, in the third session, we are going to talk about ISD and also we are going to talk about utilization of ISD. Fourth session, we will have exclusively job work and a recap of all the chapters what we have read together. Eligibility, conditions, blockage of credits, then what are the special circumstances where we are going to take the credit. All these 3 chapters, section 16, 17, 18, we will see a couple of problems in relation to these particular chapters. Now, before we start for today's discussion, I hope this material you have downloaded from the website which is available. Along with this material, there is one practice workbook which was also shared on the website. My recommendation is please download that Excel file. Download the Excel file which is meant for your working practice. Today's session, we are going to work on that particular Excel file exclusively which deals with your Rule 36 Sub-Rule 4 restrictions. So friends, please log on to the website where you have downloaded this particular PPT. Along with this PPT, there is one more material available which is called Excel file. So please download and keep that particular file also in handy. Before we start with, as usual, you can post your questions. What all queries are there which we have discussed in relation to, say, time of supply and valuation in relation to any of topics in relation to input tax credit. So I presume that you have downloaded the Excel file and also you are having that Excel file in hand with you. We will start with our discussion for today. So starting, we will start with the definitions. First definition we are going to touch upon section 2, subsection 17, which deals with your term called business. This term business is widely used in input tax section, in levy, which is dealt under section supply, section 7, read with my section 9. Before we start with this particular thing, I would like to draw your attention for two things to have clarity how this particular chapter is relevant and why is it so relevant. If we travel back in time and if we look into the litigation which was there under indirect tax laws, 85% of the litigation was there revolving only on input tax credit, especially in related to services. So if I see the list of cases which are pending at CESTAT or High Court or Supreme Court, 5 to 10% are in relation to classification, valuation. Rest all 80% of the cases are in relation to input tax credit under erstwhile Central Excise and Service Tax laws. VAT laws, we didn't have much litigation except the works contract concept, what we are going to deal with. But for that, there are no much litigation. Coming back to GST, around 50%, I would say 50% of the litigation is going to come from this particular area called input tax credit. Why? First question, am I eligible to take input tax credit? If I am eligible for taking input tax credit, what is the mechanism to take input tax credit? What is the responsibility casted on me for utilizing input tax credit? From there, the next set of litigation moves on to payment of taxes. What tax am I supposed to pay? What tax have I paid? From there, we move on to the next set of litigation in relation to e-way bill. As of today, if you have to see the list of cases which are coming before the Honorable High Court, majority, 80% of them are in relation to e-way bill. 20% of them are in relation to input tax credit. So I would say drastically litigation has come down under GST law. However, majority of the procedural issues have been brought. When we deal with section 16, I'll bring into your knowledge how this particular law was drafted, keeping in mind the earlier litigation which was there. So to start with, first definition, we deal with your business. This term business is very important for the simple reason my starting provision, section 16, starts with this particular entry called business. So from that perspective, let us read. What is the term business called? Business includes, so the term includes, connotes, this definitions A, B, C, D, E, whatever we are going to see, is not the only exhaustive list. These are indicative that business may include these things. Anything other than listed in this particular definition can also be covered under the definition of business, read with General Clause Act, where any activity which is linked with any of the entities over there, though not listed, may get covered over here. This is the importance of the term called includes. Starting with particular point A. Any trade, commerce, manufacture, profession, vocation, adventure, wager, or any other similar activity, whether or not it is for a pecuniary benefit. Now, when we read trade, commerce, manufacture, profession, vocation, adventure, this is something which generally we can correlate with the business which is undertaken by the assessee. Now, fag end of this particular clause, they say whether or not it is for a pecuniary benefit. This term pecuniary benefit indicates that whether or not the motive of making profit exists. Pecuniary benefit indicates that existence of a motive called making of profit. Now, when we think of this particular pecuniary benefit, couple of things. What comes into mind is your charitable institutions. Now, if we think of educational institution, if we think of charitable organizations, is there a pecuniary benefit? Now, I'll give an example. When we visit Dargah, when we visit, say, temple, like say when we have visited Golden Temple, when we have visited Tirupati, now can we say that this particular premises has got a motive of profit making? Now, where is the motive of profit making? When I want to have a darshan, say right from 50 rupees till 1000, there is a darshan ticket. Now, can we say that money which was collected by these organizations or institutions are having a profit motive? That is what was covered over here. To say that there is no intention to make a profit, still that can be covered under this term called business. Okay, there was one question from Supriya. All the definitions, I would say, it is relevant not from examination point of view, relevant from our practice point of view. From our examination point of view, every chapter in our institute material, wherever they have covered, these are the definitions which we are going to touch upon. Those definitions I would recommend to read through. Now, final level, do you expect a question on a particular definition to be asked? Answer would be definitely yes. For the simple reason, we need to get expertise on a couple of definitions which are in relation to valuation, in relation to input tax credit, in relation to levy, specifically wherever there is a coverage. Next, there was one question. Please make a specification in case of recent amendment whenever we come across, so that we can stress upon. Definitely, Vijay, I have taken care of that particular thing. This coverage, keeping in mind your November 2020, wherever recent amendments are there, I'm going to stress upon that particular recent amendments so that you can focus more on that particular recent amendments. I'll take care of that. Second, clause A, when we talk about business, having a profit motive is absolutely not relevant at all. So you do it for profit, you don't do it for profit, it is called as business. Now, if someone asks me, sir, what if I have been reading a lot for my final examination? At one point in time, after reading, I've got an enlightenment. This particular subject has brought in so much of capacity where I started giving Vastu related consultation under a particular tree. Now, I've been giving all preachings and I've been giving free advices how to appear for your exam, what questions are expected in this particular May. First, when I gave a few tips, it came into positive sign. All the students will listen to me. They got a positive result. Then again, few more batch of students have come. All along, I've been sitting under a tree and I've been just teaching. I have not expected any money from any of the people who have come into my place. Whoever have been felt happy, there was a small dibba called a charity dibba. People are out of their joy and worship, they just drop money into that dabba. End of 1 year, I've realized that there is a money of 50 lakhs which came into that hundi. Now, can I call that as a business activity? Please come back into this definition and see. Was there a profit motive? All along when I was preaching, all these sadhus, etc., there was no profit motive. Was this an adventure? Me, an ordinary person, becoming an extraordinary person by virtue of reading continuously is an adventure. Now, this particular activity, sir, I'm doing, say, once in a time, only once in a year I'm doing. I'm not expecting any profit. Still, am I covered under the definition of business? Now, let's see. Any activity or transaction in connection with incidental or ancillary. Last session, there was one question asked by one of you saying that, so what is the difference between incidental and ancillary? When we are reading our section 15 subsection 2, there we were talking about something to be included. There one of the friend asked, so is there any difference between incidental and ancillary? I would say incidental is a major subset, ancillary is a minor subset. Anything which is directly connected with this particular activity, incidental. Anything which is indirectly connected with this particular clause A, called ancillary. Now, from there, we move on to clause C, which is very, very important. Any activity or transaction in the nature of clause A, whether or not there is volume, frequency, continuity, regularity of such transaction. This is my answer to me becoming Sadguru, me becoming Sadhu, me becoming a sage. Now, if I become a sage, okay. Now, when I become a sage, now I have become only once in a while. Can I call that it is a business activity? My clause C says, when you do any of these activities which is covered under A, is nothing but it is a business activity. because my clause C says whether or not there is a volume, frequency, continuity, regularity, etc. I'll give an example. So there is one vintage car, like there is one good old car. I have got this car inherited from my forefathers. So this is a car which is belonging to Independence Days. Somehow we have been managing and we have brought that car till this 2020. Now none of my next generation is interested to run with this car. So what I have decided, I have put it for an auction and I have sold it in auction. I've sold this car for a sum of rupees 50 lakhs. Sum of rupees 50 lakhs. Now, can I call the activity of selling a car is business? What would you think? I've done sale of a car only once. This is a personal asset belonging to me. I'm not into the business of buying and selling. Last class we discussed about this valuation when we are talking about Rule 32. There we have discussed that when there is a purchase and sale of a car, sir, how do I calculate this turnover of aggregate turnover of 20 lakhs, aggregate turnover of 40 lakhs? There we have understood value of a taxable supply. Now here the value of car is say 0 inherited or at best 5,000. Income tax you have this inflation index. Unfortunately in GST I don't have an inflation index. What do I do with this valuation? Can I call an activity which was done only once in a while? Can I call it as a business? So there is a couple of answers saying that yes, it is a business. Now, even if I do for once, answer is yes, because my clause C says that whether or not there is a volume, frequency, it is covered under the definition of business. So this is something which we need to keep in mind. Clause D, supply or acquisition of goods, including capital goods and services in connection with commencement or closure of business. If I think of acquiring a business, if I think of discarding my business, where there is a supply of goods or where there is an acquisition, my intention is to acquire a business, my intention is to liquidate a business. Even that activity is called, even though if you do for once, it is called as a business. This is called as a business. Next, provision by a club, association, society or any such body for a subscription or any other consideration of the facilities or benefits to its members. Now this is one entry which is very important for us to understand. People who are having exposure under service tax, people who are having exposure under VAT laws probably would have seen all in relation to this particular entry E, which talks about your club. A club or membership fee which is collected by a society. Say if there is a club, it's a Bangalore Turf Club, Chennai Metropolitan Club, Mumbai Metropolitan Club. So these are all one couple of renowned familiar clubs where they collect a sum of money by way of an entry fee, annual entrance fee or lifetime membership fee. Now any money which is collected towards a lifetime membership fee, there is a exemption by virtue of section notification 12 of 2017. Other than that, anything which I collect from my members for the purpose of running the club or maintenance of a club, then this activity, they're saying that it is a business. Provision by a club. What is that provision? You're making availability of a swimming pool. You're making availability of the eating outlet which is available in the club. You want to enjoy, like weekends, you want to hang around with your friends. There is a club which gives only entry for the restricted access to the members along with couple of members along with the member. So you would like to go and enjoy a weekend in a club, then that particular facility, the provisions provided by the club to whom? To the benefit of its members. That also they have brought under the definition of business. Recently there was this West Bengal and there is one club in relation to West Bengal where the Honorable Supreme Court has given a relief saying that any activity done by a club to its members shall not be presumed to be a service. So under service tax law, any levy of service tax was put to cessation. Means to say there was no levy of service tax. Unfortunately under GST, to counter that, they have brought in this particular entry. So people are reading for your November exam. Please wait and watch for this particular provision of services by a club to its members. So any question in relation to valuation, any question in relation to availability of input tax credit. This is one provision which has come in after the recent Supreme Court case law under service tax. So similar question under GST, wait and watch for one examination question. Further to say, clause F, admission for a consideration of any persons to any premises. Admission for a consideration. So if there is a exhibition, trade exhibition, so if any money collected for a particular trade exhibition, then yes, there is a business activity. Services supplied by a person as a holder of an office, like a director when he is rendering services in relation to the position which is holding to the company other than salary. Because Schedule 3 covers that salary is not deemed to be a supply of goods nor supply of services. So if at all, if there is any services rendered by the holder of an office to a particular entity, then they say, yes, this is a particular business definition. Yes, I'll come back to my presentation. Then activities of race club, including by way of a totalizer, etc. We have discussed in Rule 32, valuation, because that is covered under higher rate of tax. Any activity covered by these race clubs and totalizers, yes, it is called as a business. Any inputs, they can take the input tax credit. Again, any activity or transactions covered by state government or central government or a local authority where they are engaged as a public authority. So if there is a government undertaking where they are engaged as a public authority, which they are not involved as an undertaking of a government, rather it is a public undertaking or a public institution which is supposed to get registered as a business, yes, that is also covered under the definition of business. Next, definition of capital goods. This is one particular definition which has got a very important role. Like one of the friend asked a question in beginning of the session. Should we need to read all the definitions? Couple of these definitions, like example of capital goods, yes, we have to read this particular thing for the simple reason. When we are answering couple of questions in our examination, based on the practice, based on the accounting entries and the intent of the law, we have to reproduce this particular definition for clarifying our answer. Section 2, subsection 19 is very, very important when we migrate from GST laws, erstwhile central excise laws, VAT laws to GST law. Let us read the definition and then we come to this thing. Capital goods means goods, the value of which is capitalized in the books of accounts of the person claiming the input tax credit and which are used or intended to be used in the course or furtherance of business. Now, first and foremost thing, when we talk about capital goods under central excise law, there was a definition called any goods which are covered under chapter 82, 84, 85, chapter 65, 05. No, there was a list of central excise tariff classification. Those alone were presumed to be capital goods under central excise law. Under VAT laws, they have specifically said, again referring to your excise tariff classification, they have given list of items which are called as capital goods. Now GST law break in the entire ice and they say, look, if you have shown something as capital goods, that means something which you have capitalized in your books of accounts. When I say capitalized, items which were taken into your balance sheet as your fixed assets, items which are taken into your balance sheet as fixed assets, that alone shall be considered to be your capital goods. So this is one definition which has a breakthrough from your erstwhile excise law to GST law. So this is one definition very, very important for us to keep in mind from examination question point of view. So question here, sir, I am into the business of buying and selling motor vehicle. Can I call that as a capital goods? Answer would be until and unless you capitalize that particular asset in your balance sheet as a fixed asset, I cannot call that as a capital goods. Question comes next. Sir, I'm into the business of this car dealer. I'm a car dealer. I buy vehicles from Maruti and in turn sell vehicles to my customer. In the process of business, there is something called demo car. What do you do with demo car? So this demo car, I just keep it for demo. If any customer is interested in a test drive, I use this demo car. Now, first question asked by you as an auditor. Okay, now how do you want to use this demo car? I want to use it for a period of 3 years. I want to use it for a period of 3 years. Later, I would sell this particular car either in the open market or to any of those employers. Now, if I capitalize that particular car in my balance sheet as fixed assets, for the purpose of GST law, that particular car, which is called as demo car, shall be called as capital goods. Now, what happens to the other cars which was not capitalized? That shall not be called as capital goods. Then what shall be called as inputs? Anything other than capital goods will be called as my inputs. So for the purpose of GST law, those items which we have purchased and we have brought into our balance sheet as fixed assets, that shall be called as your capital goods. This is one definition, very important from your examination question point of view. Next element of definition, conveyance. Conveyance, in simple term, it says a vessel, aircraft and a vehicle. Next definition, again, which is very important from your examination and also from career point of view. Input tax, second session, which we are going to cover in relation to section 17. So that particular provision, like one is in relation to section 7, section 9, section 16, section 17. If you are having a working note, please make a note of these sections, whatever I am going to talk to you. Section 7, section 9, section 16, section 17. These are the four sections read with. These are the four sections read with your annual return, which is covered under section 44. So these sections are very vital, where they use this particular definition very lucidly. So unless I have a clarity with this particular definition, exempt supply, availment of input tax credit, payment of taxes is a big mess. So I repeat the sections once again: 7, 9, 16, 17 and 44. These 5 sections, you will use this definition exempt supply widely. So I'll spend little 2 minutes on this particular definition. My term exempt supply means supply of any goods or services. Supply of any goods or services, or both, which attract nil rate of tax, which may be wholly exempt from tax under 11 or under section 6 of IGST Act, and includes non-taxable supply. So this term exempt supply, I presume that this was discussed in your levy section, section 9, when we are talking about. However, I'll cover again, we'll discuss again from ITC point of view. So when I look into my books of accounts, when there are transactions which are given for you to examine, we have used a term called means supply of any goods or services. Supply of any goods or services. Please note down 2-3 questions which I am going to put it to you. Make a note in your work notes and give me answer for that. First question. Sale of fixed asset. Is it a supply? Sale of fixed asset. Is it a supply? Make a note. Second question. Sale of petrol and diesel. Sale of petrol and diesel. Is it a supply? First question, sale of fixed asset. Second question, sale of petrol and diesel. Third question, high C sales. I repeat, third question, high C sales. High C sales. Now, these three questions, can you confirm, is it a supply or not? Let us see. When we understand that, then we will have a clarity from our input tax perspective how it is going to work. So let me have answer for first. Sale of fixed asset. Is it a supply? Sale of fixed asset. Is it a supply? Answer is yes. I can see here. Sale of fixed asset. Yes, it is a supply. When there is a sale of fixed asset, when I look into my section 7, sale is covered over there. Yes, it is a sale. Second question. Sale of petrol and diesel. Is it a supply? Let me wait for the answers from you. Then I'll clarify. No. Yes. No. Okay. Now, let me put it this way. When we read section 9, which covers with the term called levy, this section 9 has got a entry number 2. This entry number 2, which talks specifically the central tax on supply of petroleum crude, high-speed diesel, motor spirit, etc. shall be levied with effect from such date as may be notified. So as of today, it is not covered under my levy. Yes. Now we'll come to entry number 3. Entry number 3, I was talking about your high C sale. So let me get answers from you, then I'll clarify. Now, people who doesn't know about high C sale, my clarification is, when there are goods which are exported from outside the nation, example, say goods are exported from Germany. I'm a buyer sitting in, say, Bangalore. I have no interest to use those goods for my business purpose. Before the goods come into the Indian customs territorial waters, I'll find a customer in India. I'll transfer the title of those goods to the customer who is interested to buy those goods. So those goods which are purchased from me by a customer before the goods land in my customs territorial waters, that particular transaction shall be called as your high C sales. Okay. Let me see the answers quickly. 1 yes, 2 no, then 3 yes. Sale of fixed assets, petrol and diesel, yes. Sale of petrol and diesel, no. IC sale, yes, no. Okay. Good. I have seen mix and match of answers. I'll come back to your right answer. I would say make a note for point number 1, fixed asset, yes. For point number 2, petrol and diesel, it is not a GST supply. It is a supply but not a GST supply. Again, answer for that you can say is yes. Third number, high C sale, you can write down no as per schedule 3. Write down. For entry number 3, what I have said, high C sales, write down no as per schedule number 3. Yes, Sai, you are right. It is not a supply. Yes, Sai Prakash. So coming back, why is that I've asked these 3 questions? Now, when transactions are given for you, my section 16, when we are looking for eligibility of input tax credit, section 17, when we are talking about blockage of my input tax credit or restriction based on input tax credit, this is one definition we will widely use. So what it says, if there are goods or services where my rate of tax is nil or wholly exempt. So where do we find for this? Please make a note in your working note. Notification number 2 of 2017. Notification number 2 of 2017. Notification number 12 of 2017. So there are 2 notifications. 2 of 2017, 12 of 2017 hyphen central tax rate central tax rate. These are the 2 notifications. Which are relevant for understanding where the goods or services which we are looking into, either it is nil rated or it is exempted from GST law. So if there are goods which is having an exemption under 2 of 2017, if there are services which are exempt under 12 of 2017, that shall covered under this definition called exempt supply. This is my starting point for blockage of my input tax credit. There's a term called includes non-taxable supply. So this term non-taxable supply is something which we need to thoroughly understand, which is nothing but my section 9 entry number 2. Alcoholic liquor for petrol, alcoholic liquor for human consumption, and this particular petrol or diesel. For annual return, when you go for your aggregate turnover for the purpose of filing of GST annual return, that is a point in time where you will thoroughly cover through these particular provisions. So one is your exempt supply, which is covered under section 2 subsection 47, section 2 subsection 78. So these two definitions are relevant for your examination. Next, inputs, as we have discussed about capital goods, anything other than capital goods called as inputs. Input service, this is one service. As of now, you are giving your final. I'm not going to talk in litigation perspective. For your examination purpose, please understand, input service means any service used or intended to be used by a supplier in the course of, input service. Input service means any service used or intended to be used by a supplier in the course or furtherance of business. So they have said anything, if I want to say as input service, that is something which has been received by me and which is used in the course or furtherance of business. Now this term, in the course or furtherance of business, is connected with my first definition called business. Next, input tax. Now this is the heart of your entire chapter number 8. When I talk about input tax, this says input tax in relation to a registered person. In relation to a registered person. What is that? In relation to a registered person, it means central tax, state tax, IGST. It refers to CGST, SGST, IGST. Now, CGST, which was billed to me, SGST, the state levy where I am registered. If I am registered in Karnataka, if I buy goods in the state of Karnataka, any bill which is having Karnataka SGST, that is what the input tax they are talking about. IGST, UTGST made to him includes IGST on import of goods. So first thing, when I talk about input tax, this input tax to a registered person includes my import of goods. Tax payable under 9394. This entry number B talks about your reverse charge mechanism. Section 9 subsection 3, section 9 subsection 4. This talks about your reverse charge mechanism. If I have paid, look at the language, tax payable under 9394. Now I have a question here for a moment for you to have a food for thought process. Input tax, the definition says input tax includes tax payable under 9394. 9394. Question to you. We are in the month of September 2020. I have received services from Germany which is billed to me from my parent company in the month of April 2020. The bill value is for 1 lakh INR. As per my valuation rules, I have converted, applying my rule 38, I have converted into my Indian currency. 1 lakh is the value of service. On 1 lakh, 18,000 is the GST payable. Now, read this clause B. Tax payable under 9394. Input tax includes tax payable under 9394. My question to you. As on September, I have not paid my tax of 18,000 to government. Can I take input tax credit of that particular 18,000? I have received that service in the month of this particular April. In the month of April is coming to, in the month of September. Can I take input tax credit? Till now, I haven't paid that 18,000 to government. Can I take the input tax credit of 18,000 in the month of April? Please let me know. I have received a bill in the month of April 2020 on which 18,000 is payable as reverse charge. Till September, I haven't paid that 18,000 to government. Can I take input tax credit on that particular 18,000? Ravi, I got your inputs. I'll take care of that, Ravi. Someone asked for a break. Definitely, we will take care of that. Nitish says only in the month of payment. Okay. Ambika says we can take ITC. Okay. Fine. Now, Nitish, now looking into this particular definition, tax payable. They just say input tax includes tax payable. Now, until and unless I have paid, this particular definition is actually not blocking my input tax credit. And one another friend, Ambika, says that yes, we can take the input tax credit. Probably, Ambika, is it on the presumption, on the basis of definition what we have read? Let us wait and watch. But if you have making on the basis of this definition, let us wait and watch. Ravi says 80,000 is not in April. No ITC in the month of April. Sridhar says as and when RCM is paid, that can be available. Yes, Sridhar, I'll agree with you. Vinod says for ITC and RCM, first we have to make the payment. Yes, Vinod. Now, when we read the definition, it just says that ITC payable under 9394. It didn't say ITC paid under 9394. Isn't it? When we read the definition, Vinod, the language used is ITC payable under 9394. It didn't say ITC paid, right? Vijay says we can take credit of 18,000. Yes, Vijay. When we read this definition, as of now, answer is yes. Mahendra says no, since RCM is not paid. Again, question back to Mahendra. When we read this definition, it actually doesn't block that. And Manmohan also says 6 months not lapsed. Because 6 months is not lapsed. Where is this 6 months, Manmohan? Till now, whatever we have read, we didn't came across. Pradeep says we can take input tax credit at the time when you book in the accounts. Yes, Pradeep. Till now, whatever we have read, yes, your answer holds good. Now, students who are listening to this particular video, I would say, don't come with the presumption of what you have come across as a practice in your internship. Let us read afresh the law. Let us frame our opinion on the basis of the provisions of the law. Till now, what we have read, when we read this definition called input tax credit, the language used is tax payable under 9394. As of now, tax payable is nothing but tax which is payable but not paid. So if at all, if I have not paid, absolutely there is no restriction. So let us hold to that. Again, I would say hold this decision, make a note in a working note. When we proceed, we'll get an answer for this RCM. Please. People have said no, ITC is not available. Where I said ITC is available, don't mistake me. We will get an answer when we read through the provision. I want you to read through the provisions and then get the answer for that. Going further, the tax payable under the provisions of 5354 of IGST. This is what my import of service. 9394 is within the state. 5354 is import of service. So when we look into this definition called section 2 subsection 62, it says tax payable. So limited reading, I would say limited reading, input tax includes tax which is payable under this particular provision. Next, continuation. Along with my import of goods, my RCM, it is also including my RCM paid within the state, tax payable under UTGST, but does not include the tax paid under the composition levy. Generally, when I buy goods or services from, again, composition, a person who's under composition, when he's selling the goods or services, he doesn't charge any GST to me. However, the tax, in case if it is indicated inclusive of composition, we cannot take any tax which was paid to a composition dealer. First and foremost, a composition dealer cannot collect. Even if he's collecting, we cannot take because he's under composition. Yeah, there was a question from Vinod Kumar saying that how it will come into our credit ledger or cash ledger. Vinod, when we have to pay tax under reverse charge mechanism, it will come into our electronic credit ledger. It will not come into electronic cash ledger. What I will do as a registered person, I'll deposit money into cash ledger. Whenever I have to pay taxes, I use the cash ledger or I'll use the credit ledger. Give me a few minutes, Vinod. I'll answer your question in detail, reading with our provision, so that we'll have a clarity in this particular aspect. Next. Input tax credit means credit of input tax. A simple definition. When we read this 263, it is as good as a definition of a private limited company. Private limited company is a company which is not a public company. Same way, input tax credit means credit of input tax credit. Now, Section 266 talks about your invoice or tax invoice, which is nothing but section 31. When we have read time of supply, extensively we have covered section 31 subsection 1, section 31 subsection 2. Please make a note in your working note. After this session, open your BERAC, read section 31 subsection 1, 31 subsection 2 and 31 subsection 3. These three. Under 31, 1, 2, 3. Very important from time of supply input tax credit point of view. Job work means any treatment or process undertaken by a person on the goods belonging to another registered person, and the expression job worker shall be construed accordingly. Now, this definition job work, if you have a printout with you, if you have an institute material with you, please use your pencil and make a note of this point very carefully. It says any treatment or process. Now, is manufacturing activity a treatment or process? When I do a manufacturing activity, is it a treatment or process? Probably yes. Manufacturing is what? I do an activity, I do a process. When I do an activity or process on something, say something called raw material, a new product comes into emergence. A new product comes into emergence. If a new product doesn't come into emergence, I may call job work. A new product which is also coming to emergence also can be called as job work. So includes manufacture. Undertaken by a person. Underline undertaken by a person. Now here, by a person, when I refer to this person, does it mean registered person, unregistered person? It can be a registered person, it can be an unregistered person. Law is silent. On goods belonging to another registered person. Here, the catchword. Use your pencil, underline goods belonging to another circle registered person. So, if a person is doing a process or an activity on goods which are belonging to a registered person, then I call this as job work. Section 143 and that rule 38 what we are going to talk, rule 45 what we are going to talk is widely covered on this particular definition. I'll come to the third session where we'll focus a little more on this job work. Motor vehicle, this is a point of dispute. Like when we go to our second section, section 17, when we deal, we will have in detail discussion on motor vehicle. Time being, I'll skip on this motor vehicle. Output tax. Now, one of our friend asked one question. Let me just recollect the name. Vinod Kumar. Answer for your question. I'm going to explain through this particular slide, Vinod Kumar. Just let me see. A couple of questions are there. Let me just quickly cover that. We can take credit of 18. No, since has been not paid. Mahendra ji, no. Sudhir, yes, we cannot take ITC. I think there is a network issue. Your answers which were posted earlier, it is getting shooted down now. Manmohan says 6 months lapse. Pradeep Kumar says we can take input at time when books are accounted. Vinod Kumar, how it will come to our credit ledger? Dilip, when we import goods, we pay customs duty under Customs Act. We pay IGST equivalent to the loss of tax if such. It is paid under Customs Act. For reverse charge goods, we may pay tax under IGST. Yes, Dilip. Now, Vinod Kumar, answer to your question, whatever has is covered in this particular definition. Output tax in relation to a taxable person means the tax chargeable under this act. Hold on. Tax chargeable under this act. What do you mean by tax chargeable? Section 7. Tax charge. My charging section is section 7. Only if there is applicability of section 7, tax is leviable. Under this act means CGST Act on taxable supply of goods and services. Not exempted. Only on taxable supply of goods and services. Are both made by him or by his agent, but excludes tax payable by him on reverse charge. So, my output tax, when I say my output tax excludes RCM. The example which I was talking in the month of April, I have imported services from Germany and on that services 18,000 I am supposed to pay. That particular transaction, 18,000 is not my output tax. So what is that? Sir, it is a tax which is called reverse charge mechanism tax. I have to pay something called reverse charge mechanism tax. It is not included for the definition of output tax. Why? For the reason when I use my input tax credit, I can set off my input tax with output tax. Understand? My input tax can be set off with output tax. So when I have to pay my output tax, I have a choice. I can pay using input tax or using my electronic cash ledger. Reverse charge mechanism. Can I use my input tax? Answer is no, because it is not an output tax. I have to pay using my electronic cash ledger. The next definition called services. This is one definition which has got a very wide scope under section 7 of GST Act. This definition services, just read the language. Services means anything other than goods. Anything other than goods. For a limited moment, again, since you're not getting into litigation, but when you read a law, please read from this particular language. Anything other than goods. Can I call land is included here? Answer is no. I cannot include land because it is an immovable property. It is covered under Schedule 7. Schedule 3. Anything which is covered under Schedule 3 shall not come into the ambit of my services. But for the limited purpose of this definition, whatever business transactions are there, first take out the business transactions of Schedule 3. What is there in Schedule 3? This is around 8 items which is there. Refer to Schedule 3 in my books of accounts, profit and loss account. First, I'll identify Schedule 3. I'll keep it away. Second, whatever is there which is called tangible goods, which are called as capital goods in balance sheet, take it away. Which is called goods, which is sold and purchased, that also take away. Left out revenue is nothing but my service. Example comes here. So what if I get money by way of a foreign exchange gain? Can I call that as a service? Answer would be, there is no supply. I have supplied goods. My counterparty is supposed to pay $75. On the day when he has remitted, it was $78. I gained $3 per 3 rupees per dollar because of my forex gain or loss. I haven't done anything. It is neither supply of goods nor supply of services. Next question comes. So when I receive money from insurance company for a damage or claim or loss, is it called again a supply? When I look into my profit and loss account, by virtue of this definition called service, will I be forced to say it is a service? Again, answer would be no, it is not a service, because it is not rendered. For rendering a service, there should be a supply, there should be a buyer, there should be a person who is giving, there should be a person who is receiving. Because of that, it is not a supply. It is not included in the definition of service. So to answer that, it is not at all includable in the definition called service. But when we read the definition, look into the financials, look into the transactions, can it be fitted here? If it is fitted here, then levy, then input tax. All these are the things which you have to keep in mind. If goods belong to the job worker, at this moment I would say, if goods are belonging to job worker, then it is job work, but not under the GST law. As I say, section 143 when we read and rule 45, you will have better clarity. Please hold this question and post it back to session 3. Next, recipient. Now this is one definition is parallel. It has to be read along with this definition called services. So in this definition of recipient, it generally says the person who is receiving the goods is called as a recipient. If there is no consideration, the person to whom the delivery is made or the person to whom goods are made available, he shall be called as recipient. In case of services, the person to whom the services are given, that person is identified as a recipient. Why is this relevant? When I read section 16, subsection 2, there is a term called recipient. For that limited purpose, let us keep in handy of this definition. Next, works contract. I will skip this definition for today. When I come to my second session, which I am dealing with my blockage of credits, in detail we will discuss on this particular works contract. Now, we are jumping into the main hardcore topic of today's discussion, eligibility and conditions for input tax credit. Heading, please look into the heading. Eligibility means when I can take my input tax credit. Look, you are eligible. Then what are the conditions? Now, like when we go to this particular trekking, they will say, who are all eligible for trekking? Persons age more than 15 years. Persons of age less than 55 years or say 50 years. Eligibility, yes, eligibility is there. Then conditions. You should not have BP, you should not have sugar, you should not have asthma. That are called conditions. That fashion, section 16 is the opening section which says every registered person, means if I am registered, it is talking about me. Every registered person subject to such conditions, restrictions. We will read in rule 36, rule 37. Subject to such conditions and restrictions may be prescribed in the manner specified in section 49. Section 49 deals with your payment. There is one more session which is dealt separately with respect to payment of taxes. Books of accounts, records and payment of taxes. For that particular session, which is covered in chapter 12, I'll keep silent on this particular 49. Now, every registered person be entitled to take credit. Be entitled to take credit. Now, when you read the term entitled to take, I am eligible to take credit of what? Input tax charged on any supply of goods or services. Input tax charged on any supply of goods or services. So if there is a supply to me on goods or services, or both to him, for when which are used or intended to be used. I have underlined this term, used or intended to be used. Now, what is used? What is intended to be used? Used, it's a verb. It is a completed event. Intended to be used, it is an event which is likely to take place in future. So, if there is a supply of goods or services, I have received that. I have used or yet to use in the course or furtherance of his business. This term business, as I said, first definition, when we are talking about the definition called business, that is what one definition which is very, very important for me. So friends, that's section 2, subsection 17, which deals with your definition called business. Please read for the sake of your examination and also for your career purpose. So if at all, if I'm a registered person, I can take input tax credit when, again, now in between, they have used a term called manner specified in section 49. That means whatever tax you have paid, that can be used for what? For payment of taxes. That is what section 49 was referring to. So a registered person can be eligible to take input tax credit. What? Input tax charged on any supply of goods or services. Now, when I say goods, is it only inputs or is it only capital goods? My goods includes capital goods unless until it is specifically said capital goods. My term goods shall include capital goods until and unless a specific reference of capital goods is used. So goods is a broader set and capital goods is a subset of my goods. So if at all, if there is a supply of goods or services to me and I have used or intended to be used for in the course or furtherance of business, I can take the input tax credit of them. Shall be credited to the electronic credit ledger. So if there are the supply of something, this credit can be credited to electronic credit ledger. Question to your Vinod, if there is any supply by any person, that particular supply shall be credited to electronic credit ledger. This is a procedure. How it will be credited? When we read through further, we will get a clarity on that particular thing. Now, summarizing the same thing, registered person shall means it is a right. It is a right. If I have not taken the credit, is my right gone? Answer would be subject to some terms and conditions. Your right will be remaining intact. Reference shall be drawn to section 49 that is discussed in chapter 12, which deals with your payment of taxes. Now, first example. Now we will take a couple of examples. We will have a clarity on these examples. Then I'll go to one Excel file. Students, whoever are listening to me, hope you have downloaded the Excel file and kept the Excel file handy with you. We will go to that after this particular examples discussion. First example. Purchase of raw material on 1st March 2020 for 25 lakhs. IGST is paid on same for rupees 4,50,000. Goods are not consumed as on 31st March 2020. Now question here. Can I take ITC on the above material? What is your answer? Let us understand. We will discuss and don't go further. Please put your answer in the chat box. Then we will discuss that and go further. These are the goods. These are the goods purchased on 1st March 2020. On those goods, 25 lakhs is the value. I paid IGST of 4,50,000. These goods as on 31st March are not consumed, not put for use at all. Question here is, can I take the input tax credit on those goods? What would be your answer? Vinod, I'll clarify your question. Give me little time. I'll clarify your question, Vinod. Okay. Can I take input tax credit on that 4.5 lakh? Yes or no? As on 31st March, I am not consumed the goods. Goods are intact in the same position. Okay. So answer would be, I can avail the input tax credit for the reason used, intended to be used. I have not used. I have intention to use. So let me see the answers. Nidhi says, if it is intended to be used, then ITC is available. Absolutely right, Nidhi. Either intended to be used, hence ITC is available. I agree with you. Mahendra, yes, eligible at once. Yes, it is not relevant that I have to use, then only I can take. Manmohan Daga, yes, we can. Answers are all right. So, coming back to the question, yes, we can take. Now, my next question, continuation of this. Examine the position if out of the above raw material for a value of 2 lakhs have been identified as expiry as on 31st March 2020. So out of 25 lakhs, there is a material worth 2 lakhs. So on this 2 lakhs, assuming 18%, 36,000 is the credit which is available. I have purchased the goods on 1st March. On 31st March, I have noted that this material is expiry material. It is having an expiry. I cannot use that expiry material. I'm into manufacturing process. Once the goods are defect or say expired, I cannot use that material for my production process. So what would be answer? As on 31st March, on 2 lakhs, assuming 18%, 36,000 is the GST paid. Can I use that input tax credit? Can I avail that input tax credit? What would be your answer? What would be your answer? What would be answer? I can see yes, but is it to the first question or the expiry? I'm not clear. Sridhar says yes, it can be availed. Pradeep says as on 31st March, ITC can be availed. Sudhir says ITC can be availed as a goods. Okay. Students, we are back with our presentation and discussion. I quickly request you to put into the question chat box. Let me know whether you are able to hear me. My video is available and also my presentation is available. Once you confirm, we will continue with our discussion. Sorry for the technical glitches. You can just reconfirm on me on the chat box so that we'll continue with our discussion quickly. I'll wait for a minute to get the responses from you. If you all say it is okay, we'll start with our discussion. Please. Okay. Sapan says, now it is fine. Thanks, Sapan, for confirming. We will start with our discussion. So 16.1, we have understood that intention for use should exist. If that intent to use in the course or furtherance of business exists, then I can take the ITC. Section 16.2 says, ITC shall not be allowed for availment unless all the conditions stated below are complied. Now, look at this section 16.2. Like I was talking about example of my this activity of climbing. If I want to get into that climbing activity, there was a restriction of age. There was a restriction on the basis of health conditions. Same way, 16.1 said, look, you can use this. 16.2 says, look, ITC shall not be allowed unless the below conditions are satisfied. So you can first check is available, yes. Now I'll come to the second condition. Okay, I have intention to use, used or intended to be used. Second thing, I have to use it for in the course or furtherance, yes. Now what is the further condition? Let me see. Section 2 subsection A says he is in a possession of a tax invoice or a debit note issued by a supplier registered under the Act or such other tax paying document as may be prescribed. Now here they say, look, you can take input tax credit when you are in a possession of a tax invoice or a debit note or such other tax paying document. What is the tax paying? Import of goods. When I import the goods into India, there is a TR6 challan. What is my TR6 challan? It is a payment of customs duty. Once I pay customs duty, I get a document called bill of entry. That bill of entry will have my company name, my business name, my GST number, and what are the goods I have purchased. So if I have a possession of a document, then ITC can be taken. This is my first condition. Second condition, point number B. Possession of a tax invoice, debit note, or here reference to Rule 36 is what? Required along with Section 16 subsection 2. Now, why we are traveling to Rule 36? If you read the language, such other tax paying documents, if you have those documents, they say you can take the input tax credit. Now quickly we will walk through Rule 36 to say what are the documents they have prescribed. So Rule 36 says that input tax can be taken on the basis of the following documents. So there is a list which is given on the basis of which I can take my input tax credit. Point number A. Invoice issued by the supplier. So if I buy the goods, until and unless a tax invoice is issued, when I say invoice, it refers to my tax invoice as per Section 31. Point B. An invoice issued in accordance with the provisions of 31(3)(f) subject to payment of tax. Now, this is one provision I was asking you to wait and watch. I have asked one question couple of minutes back when I was talking about reverse charge mechanism. In relation to reverse charge mechanism, one point I say, the language used when we read the definition of input tax credit, tax payable under 9.3 or 9.4. When I say tax payable under 9.3 or 9.4, it is tax payable. Even if I don't pay, it is good enough is what I was talking. If I refer to Section 2, subsection 62, the language used over there is tax payable. Now when I come to the rule, what it says, look, you take the input tax credit when an invoice issued in accordance with the provisions of 31(3)(4) subject to payment of tax. Now I'll halt here and I'll clarify all the people who gave you an answer in relation to reverse charge mechanism. So my answer for your question is, when I have to take the input tax credit, I can take when first and foremost I have to issue invoice. What is that? Self-tax invoice. So there is a law called Section 31 subsection 3 clause F. This Section 31(3)(f) says you issue a document called tax invoice. This invoice issued under Rule 46. So this invoice and subject to payment of tax. Unless I pay tax to the government, I cannot enjoy input tax credit of reverse charge mechanism. So answer for the question which I have asked probably 10 to 15 minutes back. 18,000, 1 lakh worth services imported from Germany. That particular 1 lakh on that 18,000. My question was, can I take the input tax credit of 18,000 without payment of taxes to government? Before reading this provision, I said, reading just the definition of Section 2, I said yes, because the language used tax payable. Now when I came to Section 16 subsection 2, read with Rule 36, the language they have used subject to payment of tax. That means my RCM, unless I pay tax to government, I cannot take the input tax credit. Now if you ask, sir, it is confusing, I would say, go with me, go with the flow. Whatever knowledge you have got, whatever clarity you have got, now I'm just trying to bring a clarity by virtue of provisions. Probably if I try to alter your understanding again, get back, It is intentionally I'm making you to travel through the provisions. Till now, you have any questions on RCM, please post me so that I'll get back to your questions to clarify further. Srinath says it's working fine. Thanks for confirmation, Srinath. Manmohan said last example visible, that then after all screen gone. Manmohan, I think a screen is available. Sapan says again the audio video problem started. Jay, is that audio video problem is continuing? Because Sapan says from Chennai there is again a problem with audio and video. 733 has posted this. Can you quickly check and confirm, Jay? Vinod says I was talking about this point. RCM. Okay, I think I have clarified your point, Vinod. Or still, if I have raised a question, let me check on that. Sapan said the technical issue started again. Jay, are you there? Jay? Hello? Jay, can you hear me? Jay, can you hear me now? There is a issue with the technical issue with the audio and video. Please, can you check and confirm? Jay, am I audible? Hello, Jay. Hello. Jay, am I audible? Please confirm. Jay, students are saying that there is a problem again with audio and video. Is it still there? Is it? Okay. Okay, because 723, okay, done. I'll go further. Thanks for confirming. Okay, let me quickly come back to the questions. Vinod said, yes sir, clarified. Vinod Kumar, can ITC on RCM be taken in the same month on payment? It was clarified. Srinath, sir, with respect to RCM, why we need to pay and then take input? There is any logic behind the concept. Srinath, this is as good as government wants the revenue. For augmentation of revenue, this mechanism was brought in. The origination of reverse charge mechanism came in under service tax law. Way back in 2004, first time the reverse charge mechanism was introduced by the Honorable Finance Minister P. Chidambaram. That was a concept which was still continuing. This is just to augment the taxation, nothing much, as good as TDS, Srinath. Further, there is okay, let me just quickly run through questions. Many things questions have come. Ravi says it is okay. Thanks, Ravi, confirming. Manmohan says audible. Yes. Vinod says audio is also good enough. Thanks for confirming. Venkatesh, now you may proceed. Okay. Thanks for confirming. Thanks. I'll quickly come back to my presentation. Yeah. So my rule 36 says that first and foremost, you should have a tax invoice. Second, you should have paid tax on RCM. Third document is debit note issued by a supplier. So if the supplier is issuing a debit note, yes, then you can take the ITC. Further, bill of entry, then IST. IST I'm going to cover a little later on that. So as of now, whatever we have discussed, my section 16 subsection 2 says you can take the ITC provided you have any of these documents. To confirm, I should have a tax invoice, I should have a self-tax invoice, I should have either a debit note, I should have import paying customs duty paid document, then finally IST. Either of these five documents we should have. If we don't have any of these five documents, section 16 subsection 2 says, no, you're not supposed to take ITC. Now this rule 46, which is in relation to self-tax invoice. Now people are asking question on RCM. My submission here is, any tax which I am paying under RCM, as per rule 46, I have to show some document called self-tax invoice. So please make a note in your working note. Please make a note in your working note. Write down RCM-1 section 31 subsection section 31 within brackets 3 clause F. Write down section 31 clause subsection 3 clause F hyphen self-tax invoice. Self-tax invoice. Below that, refer rule 46 for format. Refer rule 46 for format. So GST law says that if you want to take the input tax credit, you should have this document called self-tax invoice. Without that, I cannot take my input tax credit. Next, rule 36(2) says input tax shall be availed by a registered person only if all the particulars are available in that particular document. Now I'll quickly come through that. You can see the proviso as of today, if you see any document, tax invoice, self-tax invoice, debit note, import document, ISD, any of these 5 documents you see, look at my second para. The document should contain may not be all the details, but this 5 details are compulsory. First point, it says it should contain amount of tax charge. So when I look into tax invoice, it should have clearly what is the tax thereupon. Second, it should have a description of the goods. Third, total value of the supply of goods and services required. Fourth, GST number of supplier, GST number of recipient. Finally, place of supply in case of an interstate supply. So these 5 elements which are required for your audit. Now, at this point, I would say to all of you, people who have completed their internship, people who are going to complete at the verge of completion, whenever you do GST audit, you do audit of purchases. When you pick the purchase documents, please look into these 5 elements. Are these 5 elements available in section 16 subsection 2 document issued under rule 36? These are 5 important elements. Examination, a question. What details are compulsory to avail input tax credit under section 16 subsection 2? I repeat my question. What are the information which are to be made available on a document referred in rule 36 for availing credit under section 16? So if I ask that question, these are the minimum details which are to be available on my document. Now, I'll come to my 4th question. ABC & Co have availed a credit of ITC of rupees 2 lakhs. Details of the inward supply are appearing in GST 2A. Examine the eligibility of the credit. Now, this is one question where I'm saying I have looked into my GST 2A. What is GST 2A? GST 2A is nothing but a mirror image of my purchases. As per my ERP, my accounting software, this is my list of purchases. A mirror image of that is nothing but GST 2A. Now, that 2A, how it is populated on the basis of the details furnished by my supplier, this is populated. Now, when I compare these 2 documents, like bank reconciliation, in bank reconciliation, what I do, checks deposited but not cleared, amount credited but not accounted in the books of account, amount debited but not accounted. Likewise, my books versus GST 2A. 2A is nothing but my purchase data uploaded by my supplier. There could be a supplier who has uploaded data, a supplier who has not uploaded the data. So here the question is, on the basis of just 2A, can I take the input tax credit? We will look into the answer for that also. Next is, Mrs. PPC Limited have availed input tax credit of rupees 12,000 on the basis of an invoice issued by an unregistered supplier who has rendered the GTA services. Now here the question is, first and foremost, when the supplier is a unregistered person, how can I take the input tax credit? Answer for that is, I can take input tax credit when I purchase from an unregistered person. This GTA is covered under section 9 subsection 4, section 9 subsection 3. 9.3, there is a list of services on that GTA is there. So what I will do, I'll raise the self-tax invoice. I'll pay this 12,000 tax on 12,000 to government. Then I'll take my input tax credit. So these are the answers for my section 16 subsection 2 clause A. Now clause B. This is one slide which is important. Immediately after this slide, I recommend you open your Excel file. The Excel file which I have shared you can open after this slide discussion. This point B says he has received the goods or services. That means to say, the provision section 16 says that I can take the input tax credit only when I received goods or services. Now I refer to one definition called receiver, who is a recipient. This provision says that when you receive the goods or when you receive the services, only then you can take the input tax credit. Question, sir, can't he take the input tax credit without receiving the goods? Law says you have to receive the goods. If you don't receive, don't take the credit. Sir, can he take on the basis of advance what I have paid? So look, I have booked a hall for my dealers meet. For the hall, 1 lakh rupees I have paid advance. On 1 lakh, that hall fellow charged me 18%, 18,000. My event is going to take place in December. Right now, I'm in September. I have booked a hall for the month of December. Can I take the credit? The law says, look, receive the goods, receive the services. Unless you receive the service, you don't take the credit. There is an explanation, a beautiful explanation, very, very important from examination point of view. It says, for the purpose of this clause, it shall be deemed that registered person has received the goods as the case may be the services. Hold on there. For the purpose of this particular clause, it says there is a deeming fiction. There is a deeming fiction. What is that? The registered person has received goods or as the case may be services. This is one amendment. One of your friend asked, so please let us know the amendments. This is one amendment which took place. That is the underline as the case may be services. The point number 1 says where goods are delivered by the supplier to a recipient or any other person on the direction of such registered person acting as an agent or otherwise before or during movement of goods, either by way of transfer of title to the documents or otherwise. This particular provision says bill to ship to model. I am registered person in the state of Tamil Nadu. My supplier is there in Maharashtra, Pune. I have got a customer somewhere in Indore. Now, for me, instead of buying the metal from Pune, getting to Tamil Nadu, again sending it back to Indore, there is a freight cost, there is a transportation and there is a delay. Rather, what I will do, I will instruct to the supplier in Pune, please deliver in Indore. There is a point in Indore. Now, this provision says, where the goods are delivered by the supplier to a recipient or any other person. This other person is nothing but Indore fellow. On the direction of such registered person, I have directed, please deliver to that person. That person is acting as an agent or otherwise. Now, when I deliver to my customer in Indore, he is not an agent. He is otherwise. That means he is a customer. Now, before or during the movement of goods. So, these goods are handed over before the movement or after the movement. How? Either by way of transfer of documents of title to the goods or otherwise. So, if you have transferred the title, if you have made a bill to ship to model, it is also accepted. Before even receiving the goods in the state of Tamil Nadu at Chennai, if I instruct my supplier to deliver the goods in Indore, for the purpose of this provision, it is saying that accepted, it is received by you. This is one provision. Second, how to interpret this point number 1. Say there is a truck fellow. I am registered in the state of Rajasthan. In Rajasthan, my factory is there. I have to purchase the goods from the state of Haryana. So when the goods have been kept ready and the seller in Haryana handed over the goods to my transporter, can I call transporter as an agent? Answer is yes. Transport is appointed as an agent. Unless he takes the position of an agent, he cannot do the transportation activity. Now read this point. Where the goods are delivered by the supplier to a recipient or any other person on the direction of such registered person, whether acting as an agent, yes, he is acting as agent. Before or during movement, before the goods movement happened, he has handed over to my transporter. Now question comes here. If transporter receives the goods, can I call that I have received the goods? Answer would be yes, if the commercial terms are X works Haryana. X works Haryana. That means the moment material crosses the factory gate of supplier in Haryana, it is X works transaction, ownership is transferred. Then I would say goods are delivered. Even before it comes to my factory in Rajasthan, by virtue of this provision, I say, yes, I have received the goods. So the provision, if I receive, I can take the credit. Clause 2. Where the services are provided by the supplier to any person on the direction of on account of such registered person. Now here, this is one amendment which has come in. Earlier, only for goods, I can get into this bill to ship to model. Now, even services. If my supplier, service provider is there in, say, Chennai, I am there in Mumbai. My customer is there in Kerala. What I will do? my supply service provider, say I'm into this networking business. I have got a client from, say, Kozhikode. In Kozhikode, there is one electrical this installation to be done where network issue has to be settled. So what I'll do, instead of me traveling all the way from Pune, I'll instruct my supplier in Chennai to give the delivery of service in Kerala. The service given in the Kerala is presumed to be received by me sitting in Pune. This is what this provision says. So this is one amendment which is important for us to understand. Till here, if you have any doubts, please let me know. I'll clarify, then we'll go to that example. If you have any doubts till this discussion, clause subsection 1, subsection 2. In subsection 2, we have discussed A, we have discussed B. A talks about document what is required, B talks about receipt of goods. If you are clear, we will go ahead. If there are any doubts, quickly I'll go through the doubts. Okay. Vasanta as question. So what is the final answer for expired goods? Vasanta, if the goods are expired and if I have no intention to use, what I will do, I'll scrap it. So if intention to use does not exist, furtherance in the course of furtherance of business, I don't use it for my production activity. Because I don't use, input tax to that extent shall not be availed. If at all, if I have taken the input tax credit, because I have identified as expired and I am going to scrap, I have to reverse my input tax credit. This is the answer to your question, Vasanta. PPT is not visible, Rakesh. I don't know. Is it all along? Sorry for that. Dilip Kumar says, when we say an ITC is availed or utilized. Okay. Dilip question is, sir, when we will say ITC is availed or utilized. So answer to your question, Dilip. When I have accounted that purchase, when I have taken the input tax credit, I call that as availed. I have pushed into electronic credit ledger. I have pushed into electronic credit ledger. That's called availed. When I use that for payment of output tax, my input tax credit, which is sitting in electronic credit ledger, I have used for payment of taxes. When I cover section 49, chapter 12, there's one more session. That point in time, payment of taxes is nothing but utilized. That is what it is required. Rakesh, PPT is not clear. Stop, PPT is not visible to me. Rakesh says PPT is not visible. Let me check on that, Rakesh. I think only you, Rakesh, only you have said that PPT is not visible. Others have not made a comment. So please excuse me if technical issues there at your end. Please check once. Dilip says, when we say ex-factory gate, supply should it be mentioned in invoice separately? Yes, Dilip. Commercial loss. Commercial loss. When you read the Contract Act, what are the terms of supply? Just keep in mind, all of us are in our final stage. Very soon we are going to get qualified as a professional. When we look into the commercial document, all the commercial terms should be available on the invoice, X works or CAF or what do you call free on road FR. Why? When we claim insurance, my insurance fellow asks, you didn't mention that this is a CAF contract. Where can I give an insurance coverage for that? So these kind of questions may come from the legal point of view. So for that reason, Dilip, my invoice should have all the commercial terms of supply. Vinod has confirmed PPT is available. Thanks for confirming, Vinod. Sridhar also says it is. So Rakesh, please check at your end once. Thanks, Ravi, for confirming. Now, I would request all of you open the Excel file. People are watching in mobile. I would request, if possible, open it in system. People are already working on the system. Please open this Excel file. I'll come to my Excel file. I'll share my Excel file also. Now, I want all of you to open this Excel file. There is a file name, sheet name called example A. Open this Excel file. This is an exercise for Rule 36 ITC eligibility calculation. Everyone, please follow with me carefully. I'll give enough time. Okay, we are at 7:56, almost till 8. I think we will finish only with this Excel. Nevertheless, it is worth working on this Excel file. Now, Please confirm if you can see my Excel file, and please confirm if you are ready with this Excel file. Please confirm if you are able to see my Excel file. Also confirm if you are ready with your Excel file. Vinod says Incoterms. Yes, Vinod, Incoterms are required. I'll wait for your confirmation. If you're ready with the Excel file, and also if you can see my Excel file, we will start working on this ITC. Yeah, I'm waiting for your confirmation. Okay. Vinod says, yes, ready. Hope you are able to see my screen, Vinod. Excel file, is it visible? Just confirm. Others also who are viewing, please be ready with Excel. It is very, very required for practice. I'm waiting for confirmation from a couple of you. Once all of you say you're able to see and we are ready to good to go, I'll get started. Yeah, thanks. Venkatesh says, please proceed. Vaishnavi says, ready. Okay, ready. Dilip also confirm. We can see the Excel and ready. Yeah, Ravi and Ambika. Thanks for confirming. I'll come back to my Excel file. Now, see, I have taken a sample data for you to practice. Now, this is nothing but my purchase register. As per the GST law, when we maintain books of accounts, there is one more technical session. After this ITC, we are going to get into the technical session. There we are going to discuss on books of accounts. This is one of the document from that. This is called purchase register or ITC register. I have put availed in month. My column B, availed month, is nothing but this is my data as per books of accounts. If you can filter this column, you can see October, November, December. What I have done, I have taken the purchases data of October 2019, November and December 2019. This is my purchase data. This column B is my purchase data as per books of accounts. Bill date. If you fill here, this is nothing but my date of bill, which is mentioned by the supplier. Bill reference, this is a bill number. Supplier GST number, this is all dummy number. Don't worry with this one. RCM applicable. By default, everything I've said no. Everything is a forward charge. Means my supplier has charged these items to me. I have mentioned taxable value. This is the column taxable value, IGST, CGST, SGST. Now here I have given something called remarks. Now line by line, I have given my remarks. So what I would request you in column, let me quickly come to this. Yeah. In column L, if you click on column L, there is a drop down. Yes, no. I want you to read the column K and fill the answer here. ITC available, yes or no. I'll fill 3 lines. I want you to parallelly fill along with me, or I want you to fill, then I'll fill the answer. Raw material purchased, section 16. Can I take the input tax credit? Raw material intended to be used. So answer, I would say yes. The moment I say yes, there is automatically a formula calculated. What is my total input tax credit? I have put the formula here. So you'll get to know what is the total ITC I can take that month. Machinery purchased. Machinery, why do I buy? I use it for my business purpose. Again, I'll say yes. Samples purchased for trial run. Now, samples are purchased for trial run. In the course or furtherance of business, probably yes, but do I make any business out of it? I may do, I may not do. A question mark. If it is successful, I may do. If it is not successful, not. So there is a wherever there is no surety, I'll say no. I cannot take my input tax credit. So I have said yes or no. I would give say 2 minutes to you quickly. You can read one by one. Say yes or no. Say yes or no. Once you fill all the queries, say till row number 37. Till here, if you fill your answers, you're going to get what is the total ITC eligible as per section 16. Now, if you can finish this, And if you can tell me what is the value you are getting here, column M, then we will discuss further. I'll give you 2 minutes time. Every line, please read through and say your answer. Yes or no. I'll again clarify one by one once you are done. So I'll give you 2 minutes. I'll wait for you, all of you, to finish and give the answer. Then we'll go for discussion on this. Keep in mind section 16, subsection 1, section 16, subsection 2. 1 says I should have received, the goods or services should have been supplied. Intention to use in business is required. Then I can take. Section 16, subsection 2 says you should have a document. Yes. You should have received the goods or services. These are the 3 provisions I have read. On the basis of that, please keep on filling the answers. And once you are done with your answer, in this column M, I am highlighting my sheet here. M6. Whatever answer you get in M6, I request you to put into the window so that I can check the answer and I confirm back to you. And if you are done with filling with this, please put it in the chat box so that we can start working on this. Once you are done, your M6, that is this formula, gets updated. I have highlighted yellow color. You can see this. Once you are done with all yes, no till row number 37, please punch your answer in your window box. I'll get a signal that all of you have done. Then I'll start working and reconfirm what is the right mechanism. Oh, good. Girija has completed. She has given 28055. Good, Girija. We'll have a check. Let us wait for at least another 3-4 answers and then we'll start. Let us wait. People who have used this Excel, probably I'm not at that best the way you use the formulas. You people actually have more experience and hands-on experience on this Excel. We will be learning to the basic level only. I got an second answer has come. Sudhi has given another answer. 3,94,000. No, 39,485. Too much gap, Sudhi. Okay. Girija say 2,80,000. Sorry, it's 28. Sorry, Girija. It's 28,055. 28,055. Sudhi says 39,485. Okay. Okay. We'll wait for another 2 answers and then we'll start discussion. I'll wait for another 2 answers. Then we'll start the discussion. Good. Sushant says 22,925. Sanjana says 37,937. Just imagine final level when paper comes for valuation and when you have to look into your answers. 4 people have got 4 different answers. 28,055, 39,485, 22,925, 37,937. Probably you could have your own reasoning. Let's go through the answer one by one. Thanks for confirming. I'll come back to my window. Hope you are able to see my screen. I'll start answering my questions. I've answered already question number, this raw material, machinery, samples. Paint procured for building. Now paint is procured for building. Paint, do I have, is it used in the course or furtherance of business? Now, can you say, is it used in used or intended to be used? Paint, it is already applied or paint is purchased for what? Building wash purpose. Now, why should I have painting? Repairs and maintenance, upkeep and maintenance. Unless I have my premises clean, unless my office is clean, it doesn't look good for my business purpose. I cannot have a wall which is falling away, which is in a dilapidated condition. So I have to have a regular upkeep and maintenance. So this paint is in relation to that upkeep and maintenance. I would say yes, this is available. Now, when I'm filling my answers, please keep in mind, please bear with me. I am reading section 16, subsection 1, subsection 2. On the basis of that, I am filling. If you refer section 17 and backdrop of that, if you're filling answer, I would say please wait for section 17 to cover. We'll go in a procedural manner. School uniform and bags for CSR activity. As we have discussed, CSR is just an obligation, not in the relation of course or furtherance of business. I'll say no. Updated on the basis of GST 2A. I looked into my portal and on the basis of I accounted as a purchase. That means goods are not actually received. If goods are received, I wouldn't say this particular comment. So because goods are not received, I would have said no. In case if you had a difference of understanding, please bear with me. On basis of this understanding or logic, I am going with. Consumables purchase, it is used in the course of furtherance of business. Yes. Air travel for managerial personnel. Now air travel. There is a business meet or there is a business purpose. That is the only reason why I have incurred that particular expense. Because I have spent for business purpose, I would say it is eligible. I would say yes. Again, people, friends, I am filling on the basis of section 16, subsection 1 and 2, what we have read till now. Please bear with me. Section 17, we have not traveled. Wait for that. Banking charges for LC. Yes, it is a financial transaction for business. I will say yes. Bill accounted, goods yet to receive. I have received a bill in a soft copy. Goods are not yet received. Section 16 subsection 2 says that you cannot take the credit unless goods or services are received. So I'll say no. Gold coins for dealers meet. Again, this is purchased for in the course of furtherance of business. Answer would be yes. Hotel expenses not for business. When I say not in the course of business, I will say no straight away. Clearing and freight charges. Now it is nothing but from customs when I have to get the documents or when I export goods out of India, I need to have a CHA service. This is in relation to that. I would say yes, eligible. Professional fee for audit. Yes, without auditor, companies cannot survive. Yes, it is available. Forklift maintenance charges. As I say, when I use something in my business, upkeep and maintenance, laptop. So my laptop is not working, battery is not working. So plant and machinery kind of thing, yes, it is eligible. Vehicle maintenance, not for business, probably for personal use of employee or a managerial person. The moment they say it is not meant for business, I would say no. Samples purchased for trial run. Again, this I link with my first example. What was that example? Samples for trial run. Now, trial run, successful, may not be successful. I may continue, I may not continue. Ambiguity persists. Because of ambiguity, I'll say no. Paint procured for building. Again, I'll go with the same logic. Upkeep and maintenance. I'll say yes. Medicines and yoga. CSR. CSR mandatory. No, I'll not take ITC. Raw metal purchased. I can take yes. Air condition purchased. Now, this is one debatable. So, why do you need AC? Is it in the course of furtherance of business? There are different ways. If it is not required, I'll not buy. So there is I'm into car dealer business. Whenever a customer walks in, there should be ambience, there should be a good working environment. When employees are working, basic amenities, fan, AC. If this is a closed environment, for the rotation of air, there is air condition required. All that reasons, I'll say yes. Consumable purchase, I can take yes. Air travel for managerial personnel. Again, it is meant for business, I'll say yes. Banking charges for miscellaneous. Bank, without bank, my business may not function, I'll say yes. Goods received, bills yet to be received. Again, without document, if you refer to Rule 36.1, Section 16, subsection 2, Clause A, he is in possession of a document. Unless I have received a bill, a document, tax-paying document, I cannot take the credit. So I'll say no. Hotel expenses, dealers meet. Now, this is a business expense for dealers. What will happen? My business gets enlarged when there is a meet arranged in a particular hotel. So again, I'm saying to other friends who have said no, just restricting to section 16 provisions till now, I would say yes. Loading and unloading charges, yes, business related. Telephone, internet, again, business related, yes. Garden maintenance. PC norms, pollution control board norms. When I say pollution control, again, friends who didn't understood what is PC, and if you have said no, I'm clarifying that. My garden maintenance, as per pollution control board norms, I have to do that. Now, when I get a license from my pollution control board or factory license, they say, look, you are into hazardous chemical or your business nature is such a way where there is a disturbance to the atmosphere. To control that pollution, you should maintain some greenery. As per pollution control, I have to mandatorily do that greenery, which I am calling as a garden maintenance. I am saying yes. People who have said no because of not understanding, please change your answer. Vehicle maintenance for business. If I say business, I would say yes. So with this, I'm getting an answer of 39042. This is my answer. This is my answer for eligibility of input tax credit on the basis of section 16, subsection 1, subsection 2, A, B, whatever we have read now. So my final answer till now, whatever you have read is 39042. Let me quickly go back to the query window and check whether there are any further answers and queries. I can see Sanjana 37, Naveen 24,167, Sridhar 38,661, Darshana 24,773, Dilip up to row 35, okay, 21,961, Vinod Agarwal 34,343, Ravi 25,356, Mahendra subject to certain things, okay. Ambika 29624, Vinod Kumar, paint can be for construction purpose, which is block. Vinod, that's what I was saying. Please bear with me. We are not in touch with section 17 till now. Section 16, subsection 1 and 2, whatever we have read, we are answering. Please bear with me. Let's go in a phase manner. If I jump straight away to section 17, people are not experienced or people are not exposed to indirect taxation. They may not follow. I'm just taking through all the assumptions and presumptions, though you have read one by one in a stage manner. So please go with me, walk with me. Vinod Agarwal says 38076. Good. I think 38076. Okay, 39042. Dilip again says, sir, it's worth doing Excel sheet. Thank you. Okay. Thanks for the comment, Dilip. Girija says 39042. I am changing the answer. Please. Yes, Girija. Good. So I think till now there are no questions. I'll continue from here. Yeah, good. So this Excel file, what I have given, this is just to make us practice how we have to decide based on the provisions what we have read. Quickly, I'll come back to my presentation. I'll just stop this window and I'll come to my another window. Let me just give me a minute. I'll come to my PowerPoint presentation. Can you just confirm if you can see my PowerPoint presentation? If you can confirm, you can see my PPT. I'll start with my discussion. Just put it to the chat window. Once you confirm, I'll go ahead. Can you see my PowerPoint presentation? If you say yes, I'll start, please. Okay. Thanks for confirming, Venkatesh. I'll start. Okay. Now, coming back to, let me just, yeah. Till this receipt of goods we have covered. Let us go further now. Okay. This section, this rule 36(3) says input tax cannot be taken. If at all, if that was paid on account of an order. If it was paid on account of an order, where there was a demand on account of fraud, willful misstatement, or suppression of facts. I'll give an example. Say there is a consignment from Pune. It is going all the way to Lucknow. There is a supplier in Pune and there is a buyer in Lucknow. On the way, when the goods are going, consignment is going, there was a mobile squad, check post squad. He stopped the vehicle. He said that, look, along with the invoice, there is a e-way bill which is required. So, Rule 138, there is one more session, don't worry. As per Rule 138 e-way bill provisions, you are supposed to have an e-way bill. There was no e-way bill. So what that this officer said, look, like this was a question raised to the buyer in Lucknow. To the buyer in Lucknow, he says, look, you are the person who purchased. When the goods are moving, you're supposed to have an e-way bill. Sir, what I'll do, I didn't have e-way bill. Then this order confirms an order. Under Rule 138, because you didn't have, he will issue one order under Section 129. All this you'll come across. Don't worry, I'm going to take you. So when there is an order, I have paid a tax. Look, I'm talking from buyer perspective. I'm a buyer in Lucknow. On the basis of an order, I have paid a tax and also have paid penalty. This Rule 36.3 says, look, because there was a demand order and that demand order has confirmed an amount which is on account of fraud, willful misstatement, suppression of facts. Now here, officer says it is fraud. I will say, no sir, I don't know, I'm guilty of this event. Now, even when you fight, department officer says, because there is an intention to commit a fraud, willful misstatement or suppression of facts, you have to pay this tax. Now, this Rule 36 says any of these events when you pay tax, you cannot take that input tax credit. So, time being, Section 16, understand that if there is any of order on the basis of which I have paid tax, I cannot take ITC on the grounds of fraud, willful misstatement, suppression. There is one session of audit, assessment and inspection. In that session, I'll take you through in detail how this will be confirmed by a department officer. Coming back, example 6. ABC Private Limited have accounted for goods worth 30 lakhs as a purchase. I think this I have covered. I'll skip for time being. Yeah. Now, this is one provision. This is one of friend called Vinod who has posted one question. I refer to that question and also for others to get clarity. GST law, this section 41 says, you are taking input tax credit. When I read my section 16, section 16 and subsection 2 refers to my section 41. What it says, subject to provisions of section 41, 43A, the tax charged in respect of such supply has been actually paid to government either in cash or through utilization of input tax credit admissible in respect of the said supply. I'll put it in simple terms for you to understand. Section 41 says, look, whatever you say, it is your purchase. Refer to your Excel. In Excel, October, November, December, we say, this is my purchases. The moment you say, this is my purchase, the moment you say, this is purchase, you have a right to update your electronic credit ledger. You are updating your purchases. You are updating your government portal called, this is your input tax credit. Section 41 says, provisional basis I am going to accept. Means I am not going to come in between. As an officer, as a taxman, I'll give you a credit of that on provisional basis. Why provisional? At later, when I do scrutiny, look, you are supposed to check and take the credit. If you have defaulted, it is your mistake. That is section 41. Section 43A, this is the entire crux of our Excel file. The Excel file what we are seeing. This section 43 says that, look, you are a buyer. I am a buyer. My supplier is there in say Kerala. My supplier in Kerala has supplied the goods to me. This section 43 says that, look, I am going to come into a matching principle. Like in accounting principles, matching concept is there. In GST law also, section 43 says, your input tax is supposed to be subjected to return filed by your supplier. My supplier in Kerala, when he files his return, what return? Under section 37, outward supply. It is a statement. When my supplier in Kerala files his statement, then I can take that input tax credit when it is appearing in my GST at 2A. This is the provision which is there in section 43A. As of today, section 43A is not in existence, means it was not given authority. GST Amendment Act 2018, I repeat, GST Amendment Act 2018 has brought in this section 43A. Because of this section 43A, rule 36 sub rule 4 has come in. People who are writing this exam in November 2020, this is one of the hardcore testing point for your examination. That is the reason I have built this Excel file. Now I'll explain this Excel file. I'll come to our, this slide, then we'll go back to our Excel file. Now this rule says that, I'll first read this English, then I'll explain to you. Input tax credit to be availed by a registered person in respect of invoice or debit note, the details of which have not been uploaded by the supplier under subsection 1 of section 37 shall not exceed 10% of eligible credit available in respect of invoice or debit note, the details of which have been uploaded by the supplier under subsection 1 of section 37. Looks Greek and Latin. People who have not into indirect taxation practice, absolutely not to worry. This is how our practice gets flourished. It is not that simple for a layman to read and understand. That's the reason a professional chartered accountant is of worthy, especially in the practice of indirect taxation. There are handful of people, you love this subject when you read this in between the lines. Now I'll come back and explain. My rule 36 has origination from that section 43A. What it says, look, you prepare your purchase register. Step 1, I have prepared my purchase register. When I look into Excel file, 1, 2, 3, 4, 5, all the purchases are updated. Now, it says, you compare this with your GST 2A. What is GST 2A? This is nothing but a mirror image of my supplier data. When my supplier, example of Kerala I was talking, my supplier in Kerala, when he files his written under what section? Section 37, subsection 1. When he files his written under section 37.1, it says you can take your input tax credit. What if he has not filed? I said if he filed his written, you can take. Next question comes. As a chartered accountant, always we ask a question. What if not done? Then it says if not done, your ITC to that extent, the Kerala supplier what he has given, you cannot take that credit 100%. How much I can take? I can take proportionately. What is that proportionate? 10% of the eligible credit. That means whatever credit is available on the portal, that credit 10% you can take is what they are saying. What I will do, I'll come to my Excel file. I request all of you to come back to Excel file which I have shared with you. Come to the Excel file. In Excel file, come to sheet 36 sub rule 4. There is a sheet name called 36 sub rule 4. Once you open this sheet, please let me know. Then I'll start my explanation. Open this Excel file, come to sheet 36 sub rule 4. Then let me know in the window box. I'll explain that. Niranjan, there was one question. Suppose if the 2A reflected and we have goods received and if we have invoice, okay. If we have GST at 2A, we have goods received. If we have invoice, we can claim Niranjan. Answer is yes. Subject to used or intended to be used for the course or furtherance of business. If that conditions is it, Niranjan, answer is yes, we can take. Sridhar says it is visible. Thanks for confirming. Ambika says confirm. PPT is visible. Thanks for confirming. Sudhir says only 2 mismatch in my answer. Okay. Adjustment for 2A. I said yes. Okay. Good. That's it's a learning, Sridhar. Sudhir, sorry. It is a learning for you and for me also. Absolutely not worry. If I am a student, I would also do this kind of additions and subtraction. Always it's a learning. Tapan says audio is not coming. Vinod says open. Venkatesh, please proceed. Vaishnavi, yes, sheet is open. Sridhar says open. Okay. Sapan, please, can you check your settings because all others have confirmed that they have opened the file and my Excel file is visible. Please, can you check your settings once? Yeah. This rule 36.4, whatever I have explained you in a simple English, that is what I have put in this particular sheet. Please go with me. Don't jump. Please go one by one with me. For the month of October 19, my total credit, for simple I said ICS, I have not bifurcated, IGST, CGST, SGST, I just say input tax accounted in my books is 1500. Out of this 1500, when I look into my GST at 2A, for the month of October, 1200 is appearing. So out of books, 1500, 1200 alone is appearing. How much is missing? 300 is missing. How do we get this formula? 1500 minus 1200, I get a simple of 300. This, why I started from October, this mechanism rule 36 was started from October 19. Because this is second attempt after this provision was inserted, very, very important from examination point of view. Now, what I did, I brought in a heading called YTD, year to date, just to track how much is the missing credit as on October 2019. This for the month of October, it is just 300 I have put in. Now, as per the law, proportionate credit, they say, look, you have purchased 1500, 1200 is appearing, 300 is missing. The question here is how much I can take. Answer for that, minimum of 1200 which is appearing on portal, on that 10%, or missing amount which is in your column H. Either of these two, whatever is minimum, that is what I can take. So 10% of 1200 is 120, missing on 2A is 300. So minimum of 120, 300, if I apply the formula, I'll get a result of 120. So in my GSTR 3B, in my monthly return, how much credit I can take? I can take 1200 plus 120 rupees for the month proportionately as per rule 36.4. This is for my October 2019. Please confirm yes if you have understood this October. Don't jump for November. I'll go with you. If you are clear with October 19, the formula, how we have got the result of 1320, please mention in the chat box yes, so that I'll go for November. You may feel simple. Step by step we will go. Don't be in a hurry. Step by step we will go. Please confirm in the chat box if you have understood the credit, how 1320 has come for October. If you say yes, I'll go further. Please confirm. If you are clear for 1320 for October, let me know. I'll go for next month. Okay. Venkatesh has confirmed yes. I'll come back to my November month. Now, please go with me. In the month of November, 1200 is my purchase as per books. Now, if I look into my 2A, I have 1000 rupees which is pertaining to current month. I have 200 rupees which is pertaining to previous month. Look carefully. Now this is just a macro file. I'll go in detail bill wise where you will understand how difficult it is. Examination, this is what expected from you. Now November out of 1200 appearing in 2A is 1000 for the current month. For the previous month, PM is my previous month. How much is previous month pending? 300. Out of 300, 200 is appearing in the current month. So now current month missing, that is 1200 minus 1000. 1200 minus 1000 is 200. And my YTD opening balance 300 minus 200 plus fresh addition of 200. YTD my missing is 300. Now formula as per rule 36.4, 10% of 1000 or 200, whichever is lower I can take. Answer for that is 100 rupees. Now what is the total credit I can take in GST 3B? I'll say 1000 rupees which is for the current month plus 200 rupees of previous month, plus proportionate credit of 100 for the month. Now this is what I have taken 1300 for November. Now here there is a technical glitch here. What I would say is, see, 120 rupees I have taken proportionately and I am taking 100 rupees again. I am taking 200 rupees here. Now here out of 300, this is just at a macro level. Forget that minor adjustments. Just understand the concept. Then I'll go bill by bill to make you understand. Technically, out of 300, already I have taken 120. See, out of 300, already I have taken 120. I am supposed to take only 180. So in this current month, when 200 is appearing, ideally, what I have to do? G7 minus this 120 which I have taken. I should get 1180. I should get 1180. This is how the formula should be. Now, practically when I go bill by bill, this is very tedious. Now, what I am doing, I'm just undoing the formula. What I am doing for making you understand, I'm ignoring blindly. What I'm doing is assuming this proportionate credit was not taken. What my formula should be for the current month, 1000, please take it. 200 if not taken previous month, please take it up. Proportionately, you can take 100 from the current month. This is what my rule 36.4 talks about. Please let me know if you have understood the formula behind rule 36.4. If you have understood, I'll go further to a detailed example to understand. Please let me know if you have understood till now. Okay, so I got a confirmation from Sridhar and okay, for October, and Ravi for this one. Okay, so till now whatever we have discussed, you are clear. Now we will go phase one by one. Can you come to example number B? In example B, this example, what I will do, I'll take you how we calculate for 36 examination. Probably you'll not have an Excel. You have to have a chart like this to calculate what is the credit available. Now I'll take you in a phase manner. Just go with me this way. From example A, you can copy your L column. Whatever answer we have given, you copy L column from example A, come to example B. Copy in your example B. Once you copy, you should get an answer of 39042. Come to your example B and copy the same to get 39042. Let me know once you are done. Example B. See, we could have done in example A. I want you to understand the difference in a step by step so that you can get a clarity with our rule 36. Once you are done, please let me know. Ambika says, explain for November. I'll do that, Ambika. Just wait for 2 minutes. You'll get a clarity for November. I'll clarify that now, Ambika. Everyone, let me know once you're ready with example B. Let me know. I'll go further. I need to copy my answer of yes or no from example A and come to example B. Yes. Hope we can go ahead. Good. Vinod says 39042. Okay. Now I'll start my Excel. See here. Can you filter ITC available? Yes. Everyone. In this column, just filter ITC available. Yes. You'll get still answer 39042. Everyone filter this column L wherever answer is yes. Now you see column N. Now column N, if you filter for there is an answer yes and no. Now what is this? My supplier, whether he filed his GST R1, yes or no. Section 43A, read with rule 36, subrule 4. My ITC, how much I can take is this much. If you filter in column N, you get a result of 25,544. Can you confirm everyone, are you getting this result of 25,544? I have filtered my column N where column N answer for yes I have filtered. Once I filter, I get a figure of 25,544. Everyone, can you confirm when you got this result of 25,544? Yes or no? Everyone, can you confirm this result of 25,000? Example B, have you got 25,544? If you have got, please confirm. Okay, Vinod has confirmed. Yes, 25,544. Okay, done. Now, see, I'm going. Rule 36 says that you take the ITC when all the conditions what we have discussed all met, and only when your supplier has filed his GST 1. Now, look at this section 37, subsection 1. Now, section 37.1 is my outward supply statement. Now, this has got a due date. This has got a due date. That means, everyone, can you come to the sheet name called due dates? There's a sheet name called due date. Everyone, come to the sheet name called due date. Come to the sheet name called due date. Come to the sheet name called due date. There, October, November, December. This is just for example purpose, not actuals. For October, 10th November is my due date for filing GST 1 of supplier. For November, the date of filing of return is 10th December. For December, my due date of filing is 10th January. What is happening? This month, within on or before 10th of subsequent month is my due date. This is what my due dates. This is just illustrative. Now, come back to your sheet called example B. In example B, look at this availed month. Click on availed month. Click something called October. Look at here. In my sheet column B, availed month, this is my purchase register. For the month of October, click on OK. Click on OK. The moment you click on OK, you're getting a figure of 4,154. The moment you click on OK, October 19, you get a figure of 4,154. Please confirm, have you got this figure 4,154? What I have done? My purchase register, that is column B, I have filtered for column October. I should get a figure of 4154. Please confirm whether you have got this figure, yes or no. Ravi says, yes, due date. Can you confirm? Have you got that 4,154? Once you confirm you have got 4,154, I'll proceed further. Mind you, examination possibility that there is a question on rule 36 sub rule 4. Reason, October this was introduced. By virtue of any means, I don't think April this would have been tested. November is the first time you're testing after this rule has come into picture. So that's the reason I'm spending decent time with an Excel file. Let me know once you got the answer of this 4154. Okay, good. Ravi has confirmed, Sudhir has confirmed, Ambika also has confirmed. Venkatesh says, I get 8654. No worries, Venkatesh, I'll take you through. Venkatesh says he got 8654. I'll take you through, Venkatesh. I'll clarify again. What I'm doing, okay, let me resume my file. Yeah. See, I have opened all the filters. I have just opened all the filters. My result is 39042. Now, first thing what I am doing, ITC available. Wherever ITC available is there, I have said yes. Now, this is nothing but section 16, subsection 1, subsection 2. All those conditions I have said yes. So, my answer, October, November, December, as per books, 39,000 is what the credit I can take. Now, When I travel to my section 16 subsection 2, there is a section called 43A. This 43A says that you cannot take if the GSTR1 return is not filed. So what I'm saying, I'm coming to my column, column N, GSTR return filed, yes or no? I'm saying yes. If GSTR1 is filed, section 43A, rule 36.4, I can take the credit. So I just said yes. Now I have come to column B. In column B, I have just selected October. The moment I select October, I am getting a result of 4,154. This is how we have got this figure. Hope you are able to get it, Venkatesh. Sai Prakash says 25,544. Sai, I have walked you through what we have done. Please check whether you got the answer now. 4154. Venkatesh and Sai, because this is a recorded session, probably you can just cross check once again. I have done through. Now I'll go further because a couple of other friends have got this answer. Now look carefully, understand carefully. Now till now what we are doing, section 43A, rule 36.4 we have done. Now again when I look into rule 36.4, my slide what I have read, it says the supplier should have filed his statement as per section 37 subsection 1. When I look into section 37 subsection 1, there is an outward supply which has to be filed within the due date. What is my due date? For October, my due date is 10th November. Now come to your example B. Now when you look into October, there are 5 purchases. Now this 5 purchases, what I have presumed, if you look into column P, as per books, I am saying I will take entire credit in my October. Now here we need to check something called column O. What is column O? GSTR1 filing date of my supplier. Now when you read section 37 says return should be filed on or before due date. Section 37 says return should be filed on or before due date. Now when you come back, look into your column number, row number 8. My row number 8, my supplier has filed return on 10th November. Is it within the due date? If answer is yes, I'll say I can take ITC during October. My row number 9, my supplier has filed return on 12th November. My due date is 10th November. Because he has filed after due date, I'll say October, I cannot take the credit. I click on F2. My 1st October, I'm just changing October as November. What I did, because it was not filed on or before due date, October I'm not going to take. I'm going to take that credit in November. Why? Again I'm repeating. This purchase, if you see this purchase row number 9, my bill dated is 1st October. Taxable value 15,000, 2,780 is my IGST. Now when I look into GSTR1 filing, row number 9, column number N9. If I look into N9, GSTR1 file, yes. But was it filed within the due date under section 37? Answer is no. My due date is 10th, but he has filed on 12th. For that reason, I'm saying that I'll take the credit in the month of November. This is what I'll mark for November. Now again, row number 14, 10th November. So eligible to take in October. Row number 15, filed on 10th November. Again, I'm eligible to take in October. Row number 16, instead of filing on or before 10th October, he has filed on 30th November. So I'll say October it is not eligible. Can I take in November? Answer is yes. Because I am not taking in October before due date. When I go to November month, when I am accounting for November month, when I am taking credit for November, this credit as on 30th November, because he has filed, though I am not eligible for October, as per this section 37, I can take the credit in the month of November. This also I am clicking F2, I am just changing to November. So this is what I have done. So if I want to take the credit for October alone, 108 plus 972 plus 104. So I'll get a credit of 1,184. So answer for you as per rule 36.4, credit eligible is 1184. This is the computation which is given under rule 36 sub rule 4. Now, hope till now you have understood the provision. If you feel this is Greek and Latin or it is very cumbersome, GST law is like that, rule 36 is 4 is like that. Only Excel can come and save our life. If you have any queries till now, please post. I'll take up your queries. If you have any queries till now, whatever we have discussed, please let me know. I'll take up your queries. If you say it is okay, we have understood, I'll come back to my provision. Okay, Vinod has confirmed 1184. Good, Vinod. Any doubts? I'll just read. If any doubts are there, I'll clarify. Ambika, you had a doubt how we have received for November. What I'm all trying to say is I have to see whether the credit is appearing. If the credit is appearing, take 100%. If credit is not appearing, what I will do, I'll take 10% of what is appearing. Now, when I travel to the next month, that is November, when I travel to the November month, what I need to do, I need to keep in mind. Look, I have taken already 10% out of what is that appearing. From that, what already I have taken, I have to reduce, and the balance amount I have to take. So in this example, Ambika, yeah, set 10% of ITC on 2A. That is, I'll come to the Excel file. Yeah, just look at this, Ambika. I'll clarify your point once again. Here, for the month of October, 300 what is missing. I've already taken 120. Now look, in the month of November, I'm taking previous month. See, column G, row number 7, cell reference G7. G7, 200 is appearing in 2A. Technically, look at my formula. Technically, 1000 rupees for the current month, what is appearing, plus proportionate credit as per rule 36.4, 100 rupees, plus what I am supposed to do, whatever is appearing for the previous month, that minus already proportionately what I have taken. Already I have taken 120 rupees. In October, out of 300 rupees, I have taken 120. Now 200 rupees is appearing. So what I will do, out of 200 which is appearing in the portal, I'll minus 120 and I'll take 1180. Now if your question comes, sir, what if out of 300 I have invoice 1, invoice 2, invoice 3. I'll put the figures this way, 100, 100, 100. This is appearing, and this is not appearing. So out of 200, this 2 are appearing, this is missing. So what I will do, 10% of this. Okay, I have taken 120 rupees. Now I'll slightly bring this down. Yeah, see, I have taken proportionate credit 120. So what I am saying, 120 divided by 3. Available proportionate balance. So when I put this way, bill wise Ambika, I'm supposed to take 60 rupees. I'm supposed to take 60, 120. But this bill to bill, this proportionate, this is something which is going to become very cumbersome. And I would say this bill wise calculation is much tougher than our final examination. Frankly, practically doing this bill to bill comparison is much tougher than our final exam, especially income tax or income tax, GST. For that reason, what practically we do is 300 is missing. Proportionately, practically what we are doing, I'm just telling you, I don't take this proportionate credit. What I will do, I'll take 1200, whatever is appearing. Next month, what I will do, I'll take 1000 rupees, which is appearing. I'll take previous month, whatever is appearing blindly. I'll just take only that much. Balance what is not availed, unless the customer is filing, I'm not going to take the credit. This is what practical scenario we are going to do. So hope I have clarified your doubt, Ambika. I'll just see if any other doubts are there. Otherwise, I'll come back to our presentation. Ambika, this to the best possible, this is what Rule 36.4, the 10% bill-to-bill accounting comes to. Sridhar says ITC can be taken only in the month of supplier filed in GST year 1, in the month supplier filed. Sridhar, you can take credit when GST year 1 is filed, subject to that filing also as per section 37, that is within the due date. Example, what we have taken, 10th is my due date. If the supplier has filed on 12th, because that was not filed on or before your due date, I cannot take my credit. Then Khan says, why is it is written 1300 as ITC availed and not 1180? Why it is written 1300 as ITC availed and not 1180? Okay, Khan, this just an example at a macro level. This is not bill to bill in detail working, Khan. What I have done, ignoring, I just blindly put 200 I'll be taking if it is appearing on the portal. Technically, yes, out of 200, that 120 I have to take out and take 1180. Just to make you clear with this Rule 36.4, the logic I have brought in. Answer is 1180. Hope I have clarified your doubt, Khan. Working capital constraint, who is this? Vinod Kumar. Working capital constraint, we can avail 10% provision if the amount is huge. Vinod, I would definitely go with you. For benefit of others, Vinod has put a point, very valid point. For working capital conditions, constraint, we can avail 10% provision if the amount is huge. Now, Vinod has given that answer for working capital purpose. I definitely go with your point, Vinod. I don't have any issue with you. But only thing is, practically, do we have spreadsheets? Do we have manpower to deal with this? Is a $1 million question. We have to wait and see. Now, coming back to my presentation, Rule 36, Rule 37, Section 37 also I have explained. Rule 36, Sub Rule 4, Notification 30 of 2020. This is one another amendment. All of you who are listening to me, this is one amendment which has come on 3rd April. My original notification which has come on October month, applicable for this November attempt, and this notification 30 of 2020 which has come on 3rd April. Also a very valid question for your November attempt. I'll put across this. First, let us read the English and I'll clarify. Provided that said conditions shall apply cumulatively for the period Feb, March, April, May, June, July, August 2020, written in the form 3B for September 20, shall be furnished with cumulative adjustment of ITC for the said months in accordance with the conditions above. This provision says that, this amendment says that February till August, Feb till August, I will not ask you to do this comparison with GST year 1 because of pandemic, because of COVID. Whatever purchase is there in your books of account, take the credit as it is on provisional. Section 41, take the credit. Now, what I am doing for the month February till August, please do this thing. What is the credit? Like month Feb, March, April, May, put all the months. Put column. What is the credit as per 3B? Once I put the credit, credit as per your purchase register. As per your books of accounts, what is the credit? You put it across. Below that, put one more column called credit appearing in 2A. Again, as per books I have put, below that as per GST 2A I have plotted. When I compare my books with 2A, I am going to get a difference. If there is a difference, all that difference cumulatively, February till August, whatever difference is there, that difference please eliminate, please reduce from GST 3B to be filed in the month of September. This is one amendment which was brought in 3rd April. So very important. Have this understood and practiced with examples what I have given. Point number D, section 16, subsection 2, clause D. It says, eligibility. I can take the input tax credit when I have filed my return under section 39. In simple terms, you're eligible to take the credit only when you file return. If you have not filed return, you don't have a question of taking the credit. That means my electronic credit ledger is going to get updated only when you file return under section 39. That is what it says. Further, it says, if you read the proviso, you can take the input tax credit provided you make the payment to your supplier within a period of 180 days from date of issue of invoice. Now, should I pay tax? Should I pay the basic amount? The provision says tax amount equal to the input tax credit along with the value of supply. Along with the value of supply, tax. So if my supplier has given a bill in the month of April, 1st April, 180 days from 1st April ends on say 3rd October 2020. So if I accounted for a bill in April 2020 and as on 5th October say, or as on 30th October, if I have not made the payment for that bill, the provision says that because you have defaulted for a period of 180 days, that ITC please reverse in the return what you're going to file. So October month what I am going to file, I have to reverse that particular input tax credit. Now, is it only tax or is it interest? The provision says that tax along with interest has to be reversed. Now, sir, if I have reversed that particular tax, what will happen to my credit? Can I take subsequently when I pay? This provision says that don't worry. If you make the payment to the supplier subsequently, you can take the input tax credit. So this rule 36, section 16, subsection 2, clause D should be read with rule 37. So rule 37 says that if you have failed to pay the supplier what value of supply with tax when within a period of 180 days, then you need to reverse that particular tax. Should I reverse only input tax? Answer is input tax along with interest. Now, this rule 37 further says, sir, what if there is a distinct party transaction? If there is a inter-unit transfer from one unit to another, because there is no consideration, I need not reverse any input tax credit. So if there is a transfer from head office to branch, because there is no consideration to be paid, no need to reverse the ITC. Sir, what if as per valuation, there is a notional supply? When there is a notional supply, I have received some goods with free of cost. Should I consider in valuation? Answer is yes. But should I pay that back to the supplier? Answer is no. Rule 37 says that distinct person and anything notionally added as per valuation, no need to reverse your ITC. With regards to interest, rule 37 says that from the day you have taken the credit till the day you have considered as your output tax, that period, not from the date of invoice, interest calculation, section 50. This also, I'll take one example tomorrow. What we need to do is when I have calculated interest, from the date of availment till the date of reversal, as if I have considered output tax, I need to pay interest under section 50. That is what this provision says. Now, finally, this section, subsection 4 says that, look, you can take input tax credit when I can take input tax credit on or before the due date for filing return under section 39 for the month of September. Simple terms, this provision says that, okay, this provision says that, look, for any financial year, that means when you have received a bill from your supplier, that bill, look which year that pertains to. If you have missed out to take in that financial year, example, sir, I have received a bill on October 2018. As on March 19, I have not accounted for the bill, or I have forgot to take the credit. Can I take the credit? My subsection 4 says that for any particular financial year, 6 months from the end of the financial year, that is my due date for filing return for the month of September. April to March, my financial year gets over. 6 months from end, that is September return. What is the due date for filing my September return? If your September return is due date on 20th October, my bill pertaining to October 2018, whatever I have not taken on or before 20th October 2018, I can account my input tax credit and I can claim the input tax credit. That is what they say. So what if I have claimed depreciation? Answer, they say, if you have claimed depreciation, you have to reverse your ITC, capital goods. Now this is one final provision what they say. only for the financial year 17-18, only for the financial year 17-18, though as per the section on or before September 18 written after take, they have extended being first year. My due date for filing written for March 2019, on or before that, we have to take the input tax credit. This is one provision which talks about your availment of input tax credit. So friends, end of session, section 16, 1, subsection 2, read with rule 37, rule 38, rule 36, rule 37, and the Excel file, whatever I have shared to you. Practice and come properly. And next session, the section 2, we are going to start with section 17, read with rule 38, rule 42. Thanks and good night. Yes, Jay, it is over.